Personally, I don't ever purely use technical analysis to trade. I think it's a really good tool you need to know and even master. But especially in crypto, if you purely use technical analysis, you're kind of defeating the purpose because there's so much insider early information that you can get into early. That's where the real opportunities are. But nonetheless, in both managing your trades and managing your investing plan with stop loss, take profit entry, and when it comes to recognizing new opportunities that will show up in price charts before the news actually releases, those can act as signal for you to look into specific projects. For those two cases, and the third case would be following the longer term trend of Bitcoin and Ethereum and figuring out if you should be relatively taking a safer approach when it comes to altcoins or more risk on approach in a good market. Those are the kind of three main ways that I like to use technical analysis in crypto. So we'll go through them. Firstly, what is technical analysis? So it's these type of price charts that you can see on all exchanges. All of the exchanges use this platform called TradingView, which we're going to get into in a bit. Technical analysis just lets you analyze historical price and volume information of any coin, any asset, and identify price targets for entry, take profit, stop loss. And it is not for predictions, unlike many people say, because it's not that they don't work, but because there is never a guarantee for one case to play out. It's always a probability between right and wrong. Why is technical analysis useful? Why might it be useful? A few just very direct things to think about. Firstly, it is a self-fulfilling prophecy at the end of the day in a retail-oriented market, especially in crypto, where anyone can trade any token. Secondly, because of the decentralized exchanges, the DeFi on-chain applications, and the fact that crypto is a global market, all crypto markets trade 24/7 across all exchanges, all timeframes. Thirdly, trade planning, making educated guesses, stop loss, entry, take profit. What is technical analysis not good for? Well, again, purely using technical analysis, not a good idea. Crypto is an information game, some super basic TA. Again, a TA stands for technical analysis. You don't even need to, at most parts, actually go on a chart and draw anything out. I personally would say, okay, this is kind of a price floor that the Chainlink team and all the exchanges they work with is trying to establish, which is around $6 to $8 ish. Is that a signal? No, but you can watch for that range, and whether if price suddenly breaks down below that, okay, that's a pretty bearish signal. If price gets above that and there's a lot of volume, okay, maybe either the larger Bitcoin market is moving or Chainlink itself might have some news happening. Just very clearly, very intuitive. Don't need to draw anything. Here is the most fundamental idea. So there are three types of trends: uptrend, sideways trend, downtrend. And why is this important? In general, prices tend to follow a trend until the trend is broken. This is the fundamental idea of any technical analysis book that you can find on the market. We will take this specific example to apply to two things. One is identifying support and resistance levels. And then secondly, typical patterns to watch for in a trending scenario. Now, let's look at resistance level. Why would any level be identified as a resistance? Imagine people's buying behavior and what you heard about on social media around that time. It's mainly just everyone very euphoric, very happy. Everyone's trying to buy, and that's what it is. People FOMO buy in. And then what happened was, for the 10 months following that, tons of people got trapped. A few typical patterns that just tend to happen, very basic. These four are kind of the most basic building blocks. A trend actually is not just, okay, whatever goes up, I'm going to follow it. Whatever goes down, I'm going to follow it. It does allow you to plan more practically. Entry, take profit, stop loss. So how do you do that? This is something very typical, which is called a stop hunt or liquidity run. Why does that happen? Moving on to some indicators. There are some very popular indicators people tend to use, specifically around exponential moving average, support resistance bands that show you, long-term buy or sell. So long-term indicators simply just show trend. I want to show you guys more practical of how to do these things. So here's TradingView. There's an indicator button. Something we mentioned earlier, which is finding the risk to reward ratio for each trade before you take them. So there's a very handy tool that is actually very good. What is pair trading? Pair trading is effectively, let's say I am bullish on layer ones as a narrative. Like, I think Avalanche is probably stronger than Polygon at the current moment based on their technology. How do I actually see this? Pricing each asset against Bitcoin or Ethereum. Any risky altcoin to make sense in your portfolio, they have to outperform Bitcoin and Ethereum. Otherwise, you're just getting exposed to the overall market. How do you actually see that? Asset basket, this is just a bit more advanced. So if you want to see how the overall type of coin is doing, you could plug in, let's say, all the alternative layer ones. And then you can see overall, how is the layer one basket doing? Market cap charting. This is important as well. Remember on CoinGecko, when we talked about how every coin out there has a total market cap and a circulating market cap. Some of their tokens circulating, but the total supply is not fully in the market yet, and the insiders still control some. So what happens is the market cap will actually increase, but the price would go down. So probably a good example would be like Filecoin, I think. Let's see here. So you see, even though market cap, right, started at around 800 million and currently is at 2 billion and was as low as 1 billion. You see price started at 50, but now is at 5. So why is there such a big difference? One very specific thing that people look out for on TradingView charts when it comes to crypto is Bitcoin and Ethereum dominance. What is this chart actually? Why is leverage trading a bad idea? I want to just show you from kind of 5 years now, having used leverage and how it really affects me and why leverage trading is a bad idea.